Hello traders, Gary Wagner here. It is 1 o'clock in Honolulu, 6 o'clock in New York on Tuesday, 25th day of February 2025, and this is the evening report for gold and silver. With the current rally approaching the magnitude of last year's advances, market participants have begun considering exit strategies. A recent Commitment of Traders report showed managed money funds reducing long gold positions by nearly 12,000 contracts. After hitting the highest record price of $2,974 yesterday, gold prices declined by $40.30 today, taking the most active April contract to $2,928.60. Although we have seen gold decline by a much greater extent, for example, on the 14th of February, gold declined by $63, there is some evidence that today's decline might mark the beginning of a real correction, the first correction since this rally began in the middle of December. Looking at this daily chart, we can see that gold has been in an overbought condition ever since the middle of January, when the stochastic oscillator moved above 80, which is the indication of a overbought stock or commodity. Another study is the RSI, our Relative Strength Index, which is also a momentum study. We consider a market to be overbought according to Wilder, who created this formula to be above 70. And recently, we have seen the RSI line move from about 76 and dip below that with current readings of 61. The RSI average, however, is a little bit higher, currently fixed at around 70. While neither the RSI or stochastic oscillator has given us definitive insight, the one piece of news which has is the recent CFTC Commitment of Traders report as evidence. The latest report showed that managed money funds reduced their gold long positions by nearly 12,000 contracts, despite a substantial net long position exceeding 200,000 contracts remaining. This reduction could be signaling a potential exhaustion in gold's recent upward momentum. That being said, the fundamental factors that have moved gold to the historic record levels recently has been a threat by President Trump to impose import tariffs, a 10% tariff on energy imports from Canada, along with a 25% import tariff on goods from both Canada and Mexico, which are America's two largest trading partners. In addition to the existing 10% tariffs on Chinese imports, which are still in effect. The combination of factors that I have just cited indicates that although a correction could be forthcoming, it is a little too early to tell. However, if gold does correct, as we spoke about yesterday, we would want to look at the various levels it could trade to before finding support. We talked about 2880 as being the first critical number we would look at. That represents approximately the 23.6% Fibonacci retracement of the $375 upward move. A 38.2% retracement would take gold about $25 above $2,800, while a deep correction of 61.8% could take gold as low as $2,740. However, we do need more evidence that supports that we have entered a correction before categorically stating this as fact. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.